Okay, in today's video we're going to take a look at PAA. This is a daily chart, and the setup that we actually looked at today was a counter trend decision versus a trend decision. So let me explain that a little bit for some of you who might be more new to looking at the markets. And this is, on the left hand side of the chart, a general bullish pattern of higher highs and higher lows. Okay, when you have that pattern, then you want to be buying the pullbacks and then looking for extensions on the upside, because the trend, or at least the current trend at that point, was higher highs and higher lows, and you would expect that pattern to potentially repeat and then maybe extend to the upside. But when things shift, okay, you can shift with it. So you can see where we've shifted now to a bearish pattern of lower lows and lower highs in this case. So if you're looking at the buy side of the market, it is considered counter trend and lower probability. Okay, and typically any new trader is going to learn that the better way to trade is in the direction of the trend. But I will tell you that there are times where you can look at counter trend trades as long as the risk is clearly defined. And I have some specific rules as far as, whether or not, to put something out that is counter trend. So here, what we did was we looked for extensions where moves tend to terminate. And I did find 1, 2, 3 extensions of prior swings, including, for example, this low to this high, and it was extended. And many moves tend to terminate at extensions of prior swings. So we had one thing going for us there as far as this counter trend trade decision. What else? Well, we could also compare swings in the same direction and see if any of these were similar. And we did find, a couple of these swings either projected from this high or this high. We found some swings that were similar to each other. So that gave us a support decision and definition of risk. So one of the things that you have to have if you're going to consider a counter trend trade entry is clear definition of risk. So for example, you could say, well, I'll look at this one if it triggers an entry as long as it holds above, let's say, this first zone. We'll call that 1903 to 1922. That's reasonable. But the other thing that I need to see for me personally to consider a counter trend decision is timing. So I ran the timing factors off of, off of both this high and this high to project for the next possible low. And I'll show you that we had one histogram that came in here that shows you, yes, there was timing at that last low. And then also the one from the other high also shows you that there were timing factors at this last low. So the time that you really want to look at a counter trend trade is when you are so close to the decision and you get a signal where your risk is minimal. Okay, so let's say if you got in off of a 15-minute buy entry after it tested and held this time and price, then that's reasonable. Okay, but otherwise, what can you do? Well, you can wait for the trend setup instead. So yes, we have a case for a bit of a rally off of this $19 area, but the other thing you can do is look at the next trend setup, which comes from taking 100% of these prior rally swings within the downtrend. And we also look for overlapping retracements of some of these prior swings. And there are a couple of areas that you would look at above the market for your next decision. And that comes in at, let's say, 2156 to 66, which includes a couple of symmetrical projections plus a 50% retracement. And the other area, well, you could look at the 618, the area of the 618, but also the other area comes in 2252 to 58, and that comes in from some of these prior larger rally swings projected from this low. So again, you have a choice of counter trend decision, but this one, has already triggered an entry, so you're a little bit too late to the party on that one. Or you can wait until it trades up into resistance and then see if it fires off a sell trigger against this next decision. Okay, take it from one decision to the next. There's no guarantee that we're going to fail at one of these areas, but you do want to anticipate that possibility and then just be on top of it and see if it does signal an entry for you or not.